I'm going to discuss very important aspect, how mutual funds calculate expense ratio on a daily basis. Same logic you can apply to the hedge funds as well. How open-ended hedge funds charge management fees on daily basis. I'll help you to understand that calculation. So it's a very simple means very simple. Let's start to the discussion. So say it. Let's say this is your balance sheets and let's say GMT fund. So I'll just create a hypothetical fund. GMT fund has received investment from A, B, C, D and E investors. So all 5 investors invested in A series. So total amount is around 1 lakh. So 1 lakh now the fund has received. So if you see, fund has received investment through, let's say, subscription. Fund has received it. All right. If the fund has received this investment, so see, before investing into any scheme, so you need to also check, certain things. Each and every fund already disclose how much fees that they'll charge it and all. So let's assume it, this fund, GMT fund, has an expense ratio of 2% for per annum, right? 2% for per annum. So fees will be charged for 365 days in a year, and cutoff timing of daily NAV would be 4 p.m. IST. IST, it means Indian standard timing. So every day fees will be calculated and published on and before the 4 p.m. every day. And let's say the initial NAV, it means, so the current NAV of the fund is, so I'm assuming, which is 10,000. All right. So NAV for per share is 10,000. So it means total units we have 10. Okay. So now if you see how fund charge fees on a daily basis. So let's say in morning we have received fund from the investor. In morning we have received fund from the investor, and same fund we have utilized, we have utilized to purchase securities. So let's say we have it means fund manager purchase TCS securities, TCS stocks, to invest. All right. In morning, that fund manager invest in TCS stocks. All right. So assume it at the time of market close. Fee that investments value reached out to the almost, let's say, 1 lakh 5,000. So that total value reached to the 1 lakh 5,000. So it means market value reached to the 1 lakh 5,000. All right. So total gain, if you see here on your investment, 1 lakh minus 99,000 would be around 6,000. So total quantities that you have, total quantities we have 30, and per quantities value or gain, that you can say appreciation, it means value. So 200 rupees we have a gain. All right. So again, I'll just quickly dilute the cash position as well. Cash position, it would be this is how your statement looks like, but post your addition of appreciation, it looks like this. So total assets has been changed. So once the total assets has been changed, then you can update your total assets. As of now, let's say we don't have a liability. So this would be your GAV, gross assets value. Gross assets value, it means, so this amount you can say this is your gross assets value. All right. So till time we haven't charged management fees, or you can say expense ratio. In mutual fund we'll call it as expense ratio, and in hedge fund we'll call it as a management fees. We'll see that. All right. So I'll now allocate the gain. I have gain of 6,000. So I'll just allocate that gain to the mutual fund, NAV account to tie that balances. So after that, if you see, my assets and liabilities both will tie it. So let's see assets and liability both now tied. But now the main task is pending, which is fees part. So if you see, this was the base NAV. It was base NAV. Now I will have to calculate, fees expense ratio on end of the day's GAV, gross assets value. So GAV is, gross asset value is 106,000. So it means 1,06,000. So I'll charge, or I'll calculate this. But before that, I'll have to calculate per day expense ratio. So per day expense ratio percentage is 2% divided by 365. So that goes to around 0.005479. So now I'll calculate fees, expense fees on NAV, net assets value. See this, around 5.80. So this has become expense fees, on daily basis. So you might see, this is becomes your variable expense. So you might see change in this. It won't be fixed, because this is based on your NAV. So maybe you would see, let's say day after tomorrow, NAV would be, I'm assuming it, NAV would be 1 lakh. So you will have to charge fees on 1 lakh. So you might say NAV is, let's say, now reduce and that reach to the 80,000. Again, you will have to pay that expense fees on your 80,000 amount. See, whether your fund is in loss or profit, that doesn't matter. Fund manager will charge expense ratio or expense fees on your investment. And if I talk about hedge fund, what will change? In hedge fund, if you see, if I take the same example in case of hedge fund, what will change? Let's see that. Let's say this is your hedge fund. In case of hedge fund, same example, right? There is no change in it because this would remain same. What will change? Only the percentage. Instead expense ratio, you will say management fees. Management fees. Let's say management fees is 2%, right? For again 365 days. Cutoff timing is 4 p.m. Base NAV is let's say 10,000, right? And as for your NAV calculation, gross NAV, it means total NAV that we are talking about. Let's say gross NAV is 1 lakh, my bad, 1,06,000. Here I'll update this as well. Total NAV. We haven't calculated for per shares. We're talking about total. All right. Here also I'll update it if you want. So see this. So NAV total gross asset value 106,000. This is my GAV. For per day, if I charge management fees, per day management fees, see, per day management fees is 2% divided by 365 into total GAV divided by 100. So 5.8000. So this fees actually I'll update here. All right. So this fees actually I'll update here. Management fees and this will affect on this will affect on unrealized gain. So it means gain, it will be adjusted. So if I just quickly calculate and see how it looks like. So how I'll adjust the gain then? So I'll record gain 594.9, 5994.17. So this will tie my calculations. This will tie my calculations. So there is a 1 penny. See this. Now if you see total assets minus total liabilities again which are tying. So I have adjusted management fees as well. But now we have liabilities. Liabilities, it means management fees. And of course this will affect on per share net assets value. Because total GAV is 106000, but after the, let's say, NAV after management fees. So NAV after management fees is 1 lakh divided by 5.808219,178. So it would be around 105. And if I calculate for per share basis, so we have around 10 units. So let's see and calculate 10599.41918. So this is how you can differentiate. If I again calculate GAV, let's say for per unit, so you would see that difference. So GAV, see GAV is 100 and your per unit share price NAV is 10599. So if you see the difference, I know that there would be difference in penny, but yes, so this is how your expenses actually create impacts on NAV for per shares. So now here what I want to tell you, see in a mutual fund you would see expense ratio. Same expense ratio we'll call it as a management fees in hedge fund. And my point is, if you see expense ratio and management fees, if both are high, then you shouldn't choose that hedge fund and even mutual fund as well. So always you should choose low expense ratio funds, because expense ratio or expenses or management fees both we treat as a liability, then that will eat your returns and that will actually create impact on your funds return in a longer run. And that's what you should avoid, those funds for investing purpose. And from a NAV calculation perspective, we calculate first management fees and then later on we calculate incentive fees. And that's what this becomes even essential from an interview perspective as well, to understand the calculations, how management fees calculation works in hedge fund and as well as in mutual fund. From an interview perspective also, you might expect question around it, how we calculate incentive fees or maybe management fees and all. Anyways, so I hope now you got the idea about how that expense ratio or maybe management fees we calculate in hedge fund and expense ratio in mutual fund. All right, so if you have any questions, you can post your thought in comment section as well. And apart from that, I have recently published one course on Udemy. Trust me, that course is huge value addition like this only, and that course price is only 400, and that would be for only next 2 weeks, and which would be for only first 1000 participants. If you are really interested to learn like this, please enroll for that. Quickly check the link in description and learn content like this, which will add huge value. All right, if you have any questions, you can text me, and please don't forget to subscribe, like and comment. If you see, I'm giving you such a content, but